Welcome, everyone. This is Joe Martinez with our Thursday morning production call. I'm excited about this one. We're going to break down budget and we're going to break down their why and how that can help you. Hold on, I got an echo. And so we're going to have some good stuff for you. First, I love to talk about this. It is an hour-long call. I want to make sure we bring you all a lot of value. So there's a lot of information. Highly suggest you have a pen and notepad out. Write down, the things that you think are going to be able to help you. And then most importantly, we're not telling you to go change your entire script, right, or how you're running an appointment. Just add the few things that you think are going to help you. Always counsel with your upline because it's very important to make sure, right, you don't go out and change everything. Most of y'all are already writing businesses just to help you, right, help more families. And most importantly, if you do grab anything and it helps you protect the family or helps you in an appointment, what we humbly ask is you post it in band and what part helped you, because it really does as a community, right? The whole cook hierarchy helps other agents say, hey, you know what, that worked. Let me go put it into mine. That way we're all learning together, and we'll get started. Again, this is very interactive, so please feel free to unmute. It's hard to keep up with the chat sometimes, so please just feel free to unmute, raise your hand. As long as it's topic related, feel free to jump in and ask any questions. We want to help you directly. So please be super interactive. So we're going to go ahead and start with the budget, right? And basically what we're going to do today is, right, we should be running as close to a perfect appointment, right? And I'm going to kind of hit on that. But what we're going to do is when you get to the budget, right, these two things really are the parts where you find out first that they even need it, right? Not every family we sit with needs it. Now, the really cool part is this is also where you find out if, hey, do I need to refer them, right, for an FIF reset, right? And then the why part is where you kind of uncover they need to get coverage today, right? A lot of times, right, you're sitting with a family, and if you ever get that think about it or let us talk, right, or I don't know if I see that I should have it, right, but I don't know if it's right for me right now, David. So let me talk to my wife, right? That's more than likely the why wasn't strong enough, right? So they knew the why, but it wasn't strong enough. So it's really important of not just asking a one-layered why question, right? You actually got to dig into it. You gotta make it right. I call it poking the bear, right? You got to make them feel a little pain. Remember, this is an emotional sale. This is not a value dollar, right? Hey, I fit their budget, and I know the budget. When we say budget, it's actually we uncover that they need this, because if they don't have it, bad things are going to happen if somebody passes away or gets sick. Not does it fit their budget because they have an extra $1,000, right? How many of y'all have ran an appointment and they got $3,000 left over in the budget, and you showed them a $50 policy because they were 30 years old, and you're like, I don't understand why they didn't get it, right? Because it's not dollar based, right? The budget, when we say uncover the budget, it's not to say, oh, they can afford it, right, and it fits it. The budget part of this is, hey, they need it because they're not financially prepared for when something bad happens. That's the budget that we're going to talk about today. Um, so I'm going to go over kind of how you prep to get to the budget part, right? Because one, how many of y'all have spoken or ran an appointment and they get uncomfortable because we start asking them, right, questions on their budget, and they're like, I don't know why do you need this, right? Why do why are we talking about this? We're talking about coverage. What do you care about how much money I make or what I do, right? So I want to make sure when we're starting to budget, first we're asking for permission. We're prepping our client like, hey, we're gonna dig into your budget so that you can do that freely and comfortably, and you also have their permission more than anything, right? So I just want to talk about on the role and purpose, right? So your client jumped on Zoom, you said hello, you build rapport, you go into the role and purpose, and we're always talking about the other role and purpose, right? It's the one that you do right before your real script. And this is where we're asking for permission to do what we're going to do in the appointment. And we're also just letting them know, right, what we're going to do in the appointment. So my favorite part of it, right, is I'm going to go through the whole thing, but I'll kind of dig into, right, asking the permission. So, hey, Alicia, right? Just my role and purpose today is to simply find you the most amount of coverage for the least amount of premium. The way I get to do that is I work with all the insurance carriers. What we're going to do today is we're actually going to ask you and verify some of your health conditions. I'll also be asking you a couple of questions about your budget, not to be nosy, right? That's where you become disarming, not to be nosy, just to kind of understand if you even need this, right? Sometimes I talk to a family that doesn't even need the coverage, right? Maybe they have a rich uncle or $1 million in the bank account. Usually they don't. They laugh, ha, 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 right? And it's like, okay, so we'll find a need. What I'm going to do is I'm going to show you a couple of options that I see other families do. You'll be able to pick whichever ones you like. Once you pick them, I'll simply fill out the application today. Usually it's going to give us an instant approval. Once it's approved, they'll draft out of your account, mail you a policy, right? But we've asked for permission. We kind of dug into a little bit, right? And it's the disarming of it's when you're doing your role and purpose, it's very important to say, hey, we're going to dig into your budget, not to be nosy, but to find out if you even need this. That lets them know maybe they don't even need this. So you're not here to sell them anything, right? That little line is super, super important to find out if you even need this. Whatever joke you crack, it's great, right? But it's very important to say, hey, we're going to dig into your budget. I need to find out first if you even need this. There are families that don't need this coverage, right? And then it sounds like a joke to say, hey, in case you have a rich uncle or $1 million, right? But the joke actually has science in it, because the joke is saying, are you financially prepared when something happens, you're going to be okay? Because when you joke with $1 million in the bank account, right? It's like, well, trust me, their head goes to like, shit, I got $2,000, right? Or I have 500 bucks. That's where their head goes, even though it's a joke, right? It's just a very disarming joke. So make sure, right? It doesn't have to be that one. The reason it's there is because it works really well, right? Do you have a rich uncle or $1 million in your bank account, right? Just always make sure you've said that a couple of times throughout your appointment, because it's going to help. It's very disarming, and it's letting them know like, hey, are you really prepared, right? Like, do you have somebody in your family that's going to help you financially? Normally, no, right? And then do you have $1 million in your bank account? Do you have enough to cover, right, what's going to happen when somebody's gone? So there's a lot of science in that little joke. So make sure you're not missing it, because it's going to help you tremendously. So then, right, you go into your real script. You've let them know what's going to happen. You've gone through the health conditions. Now it's time, like, hey, right, because I've verified health conditions, Sam. So, right, okay, perfect. We're healthy. We don't use tobacco. So now let's go ahead and go into your budget a little bit, right? Again, always letting them know what's about to happen. In the real script, it literally says, okay, now let's talk a little bit about your budget. Okay, now we're in budget mode, and I think it's super important. This is the most important part, where you uncover, right, how to leverage their situation for themselves, right? Listen to what I'm saying. Not against them, for themselves. Remember, one of our biggest jobs is to get them out of their own way. Okay, one they've never even seen. So a lot of folks have never even heard of mortgage protection. A lot of folks, or should I say most folks, have never even talked about this. Okay. Before mortgage protection, me and Sandra have never said, hey, I'm gone. What happens? What do we have in place to protect you and the 4 kids we have? Right? I'm willing to bet even some of y'all that are mortgage protection agents have never had that conversation with your own spouse. You probably need to run an appointment on yourself. Right? Because what's going to happen? Listen, we're in the business of protecting lives. If you are not here tomorrow, what happens for real? I'm looking at this screen, and most of y'all have kids. Is there something in place that's going to protect that situation? And the reason I bring this up, right, is because you having the protection, right, is edification. And this is how y'all want to know why sometimes it's hard to help a family get coverage. Usually it's because you don't have the coverage, right? It's belief. Let me tell you, if I'm gone tomorrow, my family is very, very well taken care of. Can you say that about yours? Because I get to reference that in my entire appointment, especially when I'm covering the budget, and I'm going to dig into that in a little bit, right? Because when I start asking them questions, I'm like, oh, you're very similar to my situation, right? If I'm gone, Sandra's going to be very well taken care of. In fact, I even have extra here, because I like to go off-roading. I like to go do some dumb stuff. I have this extra cover. Y'all want to know why I sell a ton of accidentals? With almost every single home, I have a ton of accidental, right? I have the belief, right? I can leverage my own coverage for them. And the reason I bring this up, right, is because we're going to go into budget. How many of y'all right now are thinking, oh, I haven't done it yet because I don't have the budget, right? Let me tell you, the same reason you're telling yourself you can't get the coverage is probably the number one reason the clients are telling you they can't have the coverage. So if you can't overcome your own objection, how do you think you're going to be good enough in an appointment to help them overcome the exact same objection? Right? You don't believe in the objection. I'm just telling y'all, I had this trouble when I started getting more and more coverage. All of a sudden, I sold more and more, and I helped more and more families because I had the conviction and I was able to say, hey, this is what I have in place. Oh, money's tight. Well, this is what I did. Right? Because I in the budget, I'm able to say little things like, oh, well, I saw that you're saving $500 a month. You know what I did? Was instead of 500 going to the bank account, I just simply started putting 400 to the bank account and 100 to my policy. I can't tell you how many people say, oh, well, let's do that. But do you know why? Because that's what I'm doing, right? Like I'm showing them how I overcame my own objection in the budget, right? Because that's what you have to look at, right? I'm able to say, hey, you know what? So I stopped taking my family out 3 times or 5 times, a month to dinner or to the movies, because the movies is $150 if I take my 4 kids. So we stopped going once a month, but I made sure they're protected now. And when I say that, they're always like, you know what, Joe, you're right. That's worth it. Right. But you got to be able to overcome your, right. I'm not saying go write a policy. That is not what I'm teaching y'all. I'm just saying, right, start thinking about these kind of things, because if you can't help overcome your own objection, this is why we've gotten really good over the years, because now, right, we're leveraging our own position. We believe in it, right? Belief is the biggest one. And we're teaching them, right? Like, hey, this is what I did to help overcome in this situation. It's amazing of how it works, right? And it's amazing of how more different coverages you have, you can go out and help families in so many different ways the way you're protected, right? Because you're able to explain what you did in your situation. Again, we're not salesmen. We're just trying to help them the best way possible to get the most amount of coverage for the least amount of premium. So on the budget, right? On the budget, right? So we've asked for permission. Hey, now we're going to go ahead and dig into your budget. And so let's start with that, right? So the way I started, right, is I just simply follow the script, right? I've verified already their health, their age. Now I'm now going to budget. I still make it feel like I'm just getting to know them, right? A phrase I love to use, hey, Madison, now this is where I get to know you a little bit financially, right? Y'all want to write that down? That's a great way to dig in, that it's not invasive. Hey, I just now, Sam, it's just time to get to know you a little bit financially, just to find out if this is right, the best coverage for you, or again, right? And I re-edify the joke, or again, in case you even need it, right? That maybe that rich uncle shows up somewhere and they're like, huh, I wish, right? So I re-poke the bear, right? Because I want to make sure, right? Or that maybe that $1 million, right? You'll be able to tell me that one. They're like, yeah, that's going to be a quick conversation. Those are the little things that I've heard them tell me, right? Because they don't have money in their bank account, right? So then the really important part here is you understand their financial situation. And what I mean by that is you're going to have to ask some really deep questions, and not deep emotionally, deep as in layered. Like get the information properly, because if not, it works against you too, right? The last thing you want to do, and again, I'm going to raise my hand because this is what I was doing and I was messing up, was I just skimmed through it, right? I did the whole, hey, David, so how much money are you bringing in? I'm bringing in 5. Okay. And then Danelle, 2. Okay, great. And so 2, 5, great. And then, I know the mortgage is 1,500, everything going out, how much is that? And then they'll just give me a number and I'd write it down and then I'd move on. Right? It's so easy to do that because it's so uncomfortable to dig into somebody's budget. I'm telling y'all what I felt. I hope y'all can relate. But that's what I would be doing when I'm uncomfortable. And I even sometimes do it now when I'm rushing. And guess what I get every single time? Well, let me check out my budget and find out if we even need this. And it's just like a stab in the heart because that's what I was supposed to do. Right? It's so easy to just skim over this budget and not understand. And why I brought those things up is because, look, they told me their budget, their income. I didn't even ask if that was net or gross. You gotta know that, right? You really need to understand in depth their budget. Hey, everything together, how much is going out? Blank. Okay, great. Didn't even compare it to how much is coming in, right? Didn't even verify if that number is going to be solid. So I want to dig into this because this is where you find out that they need this coverage. This is the diagnosis, right? We talked about, y'all have heard us say about the doctor, you can't prescribe mortgage protection unless you know their situation. You got to ask really good questions. I'm going to share my screen. Let's do. Everybody see this? Somebody give me a thumbs up. Right? So this is Inquility HQ. Again, you got to be able to dig into this. And there's nothing better than what's already in place. You don't got to go reinvent the wheel, right? This is in the script. So if you have not ever come in here during your appointment, please write this down. I'm not running a correct appointment. This is why you are not closing at a high rate. Right? Because I get to talk to agents, Amber, right? We get a lot of agents that are like, no, but I'm closing, I'm helping families. Yeah, of course you are. People want this, right? We have the best leads in the industry. When that lead shows up, they have high intent. Okay. I'm not teaching you how to write 1 or 2 or 3 policies. I'm trying to write, when you look at some of our top producers, some of Symmetry's top producers, and why they're closing. And when I say closing, that means when somebody shows up on Zoom for you, and you're not closing at a 70% to 90%, this is why. If you don't even know where this is, you haven't even ran the right appointment. And when you've been calling David, I don't know if this works properly, right? Like I bought leads, I dialed, I booked appointments, and I sat with them, David, and I'm going broke. Are you really following the system to a T? You got to be able to ask yourself, right? Like, this is the reason we do this call every single Thursdays. We continue, right? Like I just told y'all, I forget, or sometimes I get nervous or I get lazy and I don't do this in an appointment. And trust me, I don't close them. It's making sure you have the highest odds of helping that family in that very first sit. So for everyone, you're going to go under sales tools. We're simply Inquility HQ. We're going to go to FIF resets, and you're going to go to FIF submit a request. Look up, all your leads are going to be in here, right? Whichever lead you want to look up, we'll look up John. You can pick whichever one, and it's going to pull up the lead. Okay. This is where, right, you're going to start entering this information. I've already pre-entered some of it, right? So again, going into an appointment prepared. Don't go in here the very first time when you're in the appointment in the middle of it. Go pull up the lead. You know you have an appointment. You should have already prepped with your upline, and you already have some of the basic information. How many years their term is, how much the mortgage payment is, right? How much the loan amount is. It's 30,000, right? Let's go 300,000, right? You're able to enter this information, already have it pulled up so that when you come in here, you already know what to do. So I want to dig into, right, finding out how many years their term. It's super easy, right? Or it's a 20. And here's another thing, right? Don't go in here and practice during your appointment, right? Go in here and fill out a fake one, right? Like find a client, a random client, and start just filling in a whole bunch of information. Pretend you're running an appointment. And start asking, right? So that you can have a smooth flow, so that you can say, hey, David, I just want to confirm again. I know I got this information yesterday. So it was a 20-year term. It was a 300,000. dollar mortgage and you're like, no, you know what? We looked at it, Joe, it was 280. Oh, okay, let me change that. I'm comfortable on this thing, right? Because I use it. 280,000, perfect. And you said it was 2,500. I know you said yesterday on the phone it was around. Do you know the exact dollar now? Right? Like I'm not afraid to really understand. Oh, it was 24.95. Perfect. Thanks. And again, are we doing any overpayments? Are you doing any extra? No. Great. Slide this over here. Okay. You do that, right? Okay. Now let's go a little bit. And I actually do the income next. So I'll scroll down here. Like, okay, I verified that. Let me do y'all's income. Again, I want to make sure I got this correctly, David. And David, if you can unmute and just kind of go through this with me, right? Just give me some fake numbers. So David,
Yes.
first, what do we do for work?
I'm a mechanic.
Okay, sweet. My dad was a mechanic. What kind of cars you work on? What do you work on?
American cars only. I only know
Like
my
it.
way under the hood of an American car.
Right?
And yes.
Very cool. And who do you work for?
I work for just a small local garage. I'm just their general mechanic here at the garage. Just a local guy.
Nice. And then so income, Fred, again, and let's talk about just net, right? Just what you cash on your check, right? So that way we know that's what we want to cover, right? How much is coming in a month, and let's just do you first, and then we'll get to nows.
Yeah. About call it 4,600.
That is net, right? That's what you're able to cash.
Yep. Yep.
Okay, perfect. And then now, how much income are you bringing in?
Oh man, I'm only about 1,500.
Okay. Yeah, y'all love comparing myself, right? With relating, should I say, right? Man, y'all are pretty set up, pretty much like me and my wife. We got 4 little kids, and Sandra tries to work as much as she can, but I think she's more part-time Uber for the kids than anything.
Right. The volunteer Uber driver.
Oh, it is. It is. So let's see. So now you're bringing in 1,546 from David, and then any other income coming in?
No.
Mm-mm.
Mm-mm.
All right. And so now let's go. I know we did the mortgage, right? And we got 24.95 going out. Let me just dig a little bit. Do y'all have any car payments?
Yes, 2 car payments.
2 car payments. Okay. Together, how much are they?
Call it 800.
Okay. Paying anything extra on those?
No.
Okay. And then utility bills, let's bunch those together, but like gas, trash, electric, even phones.
I have to consult my accountant. Donnell, can you answer that?
Y'all are like me. If you ask me, David, I wouldn't know.
Right.
I'm like, I make the deposits, you pay the bills.
Probably about 400. I'd say that's
400?
good enough. It's, we did just move, and so I actually don't know what that's going to be for the new house. So
Yeah, that's pretty normal. Everyone, what we usually do, so that we can get as close as possible. What were you paying at the other house?
oh, I mean, like, yeah, it was like right around 400.
Okay, and then did y'all get a bigger house or smaller?
No, it was just nicer.
Okay, perfect. So usually the clients tell me it'll be about the same, right? If we went a little bit bigger, we'd increase, but if it's about the same size, let's keep it there.
That makes sense.
Yeah. And then other insurances, and when I do insurance, I love to ask, right? Car insurance, right? The homeowner's insurance, life insurance, anything like that?
So car insurance, which we have a teenage driver, so it's about 500 a month.
Oh, I'm not waiting for that. I got 2 12-year-olds, so they're coming.
Save up.
Scaring me, David.
Right.
And credit card payments, and any debt, right? Sometimes we have some other, either a loan or anything like that, but credit cards.
No, fortunately, no debt.
Sweet.
Just mm-hmm.
Let me just go through it. It's got a list here. I want to make sure I don't miss anything. So we don't have any personal debt or anything like that?
Actually, no, we do have a personal loan. I guess that's a good point. I didn't think about that.
Yeah, that's what.
It's about 10,000. We took it out, but it's probably going to be paid off in the next year or so.
What are you paying on it monthly right now?
It's right now about $700. I guess
Okay.
if we're paying it off, that's actually, I wouldn't say it was that high.
Okay, no, that's good. So you're paying monthly on that 700?
Yeah, we like that's a lot higher payment, but I want to get it done within the
Okay,
year.
cool. All right. And this also asked me a little bit on retirement, right? Just to kind of get a really good financial, again, picture of what's going on in y'all's home. Anything that would help protect y'all, right, in case, right, somebody were to pass away, kind of acts like the life insurance or mortgage protection, but any 401ks that y'all have going on right now?
No, I wish, but because David works for apparently a small local mechanic shop,
Right?
yeah, they don't have anything like that. So
Okay,
we
that
can't
makes sense.
contribute to a 401k.
Okay. Anything else? Sometimes folks like to dabble in the market, a money market account or anything like that.
No.
No, even though it is just a small local guy, I do have some life insurance through work, so I really do feel pretty good about that.
Okay. Okay. Let me add that in here. How much, do you know how much coverage you have?
Um, it's like, I want to say it's like $100,000.
Okay. Yeah, pretty
Yeah.
normal. And that's through work, correct? It's not something you own on your own?
Yeah, no, it's just through work and just comes right out of my check.
Perfect. You know what you pay on that?
I don't, because yeah, it's just been on autopilot coming out of my check.
Okay, no big deal. Usually pretty small, right? That's why we get them or we add them on there. Okay. And let's see. Just want to check one more thing. How about savings account? How much do we have in there?
We have about 5,000 sitting in savings, just that emergency fund.
Yeah. Yeah. And then, so how much are y'all putting into that monthly?
Right now it's less just because we're trying to pay off that loan.
Okay. If we guessed, just put a number,
Um, yeah,
$500. How much are you putting?
I usually like to put about 500.
Okay. Let's see. And then, so I just want to make sure I got everything in here correctly. So it looks like between both of y'all are bringing in around 6,100. Everything going out, including the mortgage, is really close to about 5,400. So we got about $700 left over a month. That sound right?
Yeah, seems like it.
Mhm.
After everything else that we pay, yeah.
Okay. Perfect. And then I know y'all are still able to see my screen, right?
Yes.
So, this is where I kind of like a little bit to just kind of talk about what mortgage protection is and how it works. Again, right, what mortgage protection is, it's simply a kind of like a life insurance policy, right, that families take out to in case, right, one or the other were to pass away. We don't lose the home, right? There's two reasons why somebody loses a home. Either somebody right, the main income winner, passes away, and Danelle, right, like in y'all's case, if David were to be gone, we wouldn't be able to afford the mortgage. Does that look about right? Is that a pretty fair assessment?
Yeah, it would be very difficult.
Right.
Mhm.
And then,
We do have that life insurance policy through work, so
yeah, and thank God we do, right? And then, right, another reason we look into this also, right, David, is what if you just got sick, right? Heart attack, stroke, and cancer. I'll love to bring that up. That's a benefit of the mortgage protection. But right, same thing, if you were to just get really sick with one of those and not be able to go to work, you're still here with us, but right, the income stops and we still lose that 4,600. Right.
Yeah.
So the mortgage protection will
It
protect us
feels
on both of
lost.
those sides.
Yeah.
So, and I use this for a visual, y'all, but I love to do it because it really teaches us, right? And hey, do we even need the coverage again, right? Sometimes we don't need it, but right, as y'all see, right, we have about 700 left over with both of y'all's income, so y'all are doing good, right? And y'all able to, have a good life, right? And get all the stuff you want. But sometimes, unfortunately, bad things happen, and Danelle, David doesn't come home, right? And I do this. How does that make you feel?
it's uncomfortable.
Right? Because you said you had about 5,000 in the savings, right?
Yeah,
So
which I
that's,
thought we were doing good with that, but
hey man, I bring this up, right? Me and Sandra were the same way. I was like, we're doing okay. I made, David, we make pretty good income, right? Just like me. And it's amazing of how sometimes it just adds up when you put it on paper, right? Because me and Sandra didn't have more than 2 months worth of bills, right? And if y'all have 5, maybe a month and a half,
Yeah. Yeah.
right?
Barely.
Barely.
And I love to do this again. I don't, it's more of a just helping y'all understand, right, what the income looks like for the situation. And I'm sorry, you said 4,600, right?
Yes.
And because it goes even both ways, right? Especially looking at this, David, right? Danelle's not here, right? And we're kind of still in the same situation. We don't have enough, right? So pretty fair assessment. We should probably, y'all want to continue to look at some options, maybe get some coverage today.
Absolutely. Absolutely. And can I hit a quick pause, Joe, just to make mention of something?
Yeah.
If anybody's not pressing on this pain point that I'm about to touch on, please do. While Donnell's income may only be $1,500, the loss of her would be so much more impactful financially to the family than just that $1,500, because she is that unpaid Uber driver that I said. Let's pretend we have 3 little kids at home. To replace her and have to hire somebody to do everything that mom does, it's far beyond the $1,500 that she brings home. So definitely push on that pain point of what life would look like without that person.
Yeah, because that's a good one. Because when I do that, right, on hers, and I'm like, yeah, and I know it wasn't financially, a lot of loss, but obviously, we love our wives, David, but this was brought to mind. I even tell them, right, I love to tell them that I didn't even know about this either, right? It was like I never thought about this, but one of my clients one time brought this up. They're like, no, like I need coverage on her too, Joe, and I need a lot of it. He goes, who's gonna babysit them? Because I work long hours. I'm gonna have to pay somebody to do this. I'm gonna have to pay, right? Who's gonna meal prep or get us dinners or more, right? Like there's a lot more there, Joe. Like I know the value in this. And this was the client telling me one time, David, and I was like blown away.
Yeah.
Right. And I was like, we need to bring, these are the tough and very awkward conversations, right? But this is where we make our money. This is where you help a family.
Absolutely. And it takes it all the way back to, we get confused that we work in financial services. This is not financial services. This is emotional support. This is emotional sales. And that touches on it at its deepest core.
Well, so again, right, breaking down those finances in detail, right? What I love to, and look, you're going to get no's still after this, right? But what I love to tell an agent is when you get your no and you get off the phone and you call your upline, you should, right? You didn't get a yes, you should be counseling with your upline. I love to ask, and they told you think about it. They're like, yeah. And then they said it was because of money. They're like, yep. Can you tell me how much money were they doing? And I even dig in with the agent and they're like, no, I don't understand. Like they know, Joe, they know that $3,000 is gone, right? And there's just no way. When I hear that in the voice of an agent, I'm like, you did a really good appointment. Like it's just one of the no's and be happy with it, right? We didn't say we're going to help every single family, right? They don't get it. They don't get it, right? But if you don't feel that way, like if you don't feel mind blown that they didn't pull the trigger on this right now, right? Like that then you didn't do a good appointment, right? You need to make sure you dig into it. But if you feel like they're crazy, like makes no sense, right? Like I sat with one last week that the husband was bringing in, I think it was like 12 grand. She doesn't work. And in fact, they were like internationals. They came over here because he was working for an oil company or something. So he makes a ton of money. She makes none. They're in a different country with no family help. She's going to be by herself with their 2-year-old daughter, and they have no money in their savings account. Like, it's like, what are we talking? Their extra budget, David, was $7,800 a month. That's their disposable monthly income. It blows my mind. And they were a young couple. It was like $86 to cover his $480,000 house. It was a big old mortgage. It was almost $4,000 a month, and it was like $6,500 in expenses.
Unbelievable. Yeah, you just got to shake your head at those.
Right. But you have to be able to feel that. If you don't feel that in your appointment, right, then you need to run a better appointment, right? Like dig into that money and then just be okay with it. But that's how I feel comfortable in saying, hey, I did my best. Like I know exactly, because trust me, I don't always do my best, right? I'll run an appointment and, I'll talk to James. I'm like, I messed that one up totally. Right? Because I didn't compare, right? My biggest mistake is sometimes I skim through that budget and I'm like, I didn't do that. David's gone, Danelle. Look at that budget. And I bite the bullet every single time, right? Again, I'm just saying run them as many times as you can possible correctly. But I'm telling you, as soon as you start leaving these little things out, right, your odds of closing and helping that family right there and then start going down and down and down. Yes, you're going to make some sales. I'm just telling you, right? Because I'll have an agent say, hey, David, I didn't do that and I'm helping families. I didn't say you wouldn't. The leads are the best. I'm just saying you want to know why you write $5,000 and not $20,000 a month. That's why, right? Because you're not converting at a very high rate, and it's hard to do it every single time. That's why we talk about doing the reset, right, for yourself in between appointments, so that you can sit down before you sit down with that family. You take some time and you sit down by yourself and say, okay, I'm going to be the best version of this family today, and I'm going to help them, and I'm going to ask all the questions the way I should. When I learned that was a game changer for me, because then I'm not going into it's like stopping myself from going into the appointment lazy, right? Or rushed or emotional or whatever's going on in my head at that point, right? Take some time and say, okay, I'm going to go into this appointment the best version possible, and I'm going to ask all these questions, and I'm going to poke that bear, because that's why we don't, right? Because it's very awkward to say, right? So like, y'all, $5,000 in your bank account, Danelle, that's only a month and a half. Like that is so awkward to say, right? Like it's even a little insulting, right? You're a little rude, right? Because you're kind of saying, hey, y'all are not doing well in life in this little part, right? And this is where we make our money, and it's digging into that and saying that, because it gives you so much leverage and power. Right. And again, to get them out of their own way, because again, we're going to go into the why questions now. But before we do that, everyone know the FIF, how to get to it. Y'all saw how we dig into it. Get as detailed as you want. It helps you. Something I want y'all to notice while I was asking those questions, thanks David and Danelle for doing that, right, is I'm still building rapport, right? Because these are very awkward questions. Hey, me and Sandra are the same, right? And I try to mimic or mirror as much as I can with them so that they feel comfortable giving me more information. It's amazing, because if you're very dry, if you do how much a month is coming in, what's this, what's the electric bill, what's this, they're going to give you just what you asked. Versus when I'm building rapport while I'm doing that, it's stuff like, oh, and Danelle, what was that other thing we were paying, right? And like they start going back and forth, and they're like, oh, and they're giving me all this extra information. Again, they feel safe, right? They're like, oh, and you know what? Every month we do like to go do this, and we make an extra 1,000, right? Or they feel comfortable to correct you. That's a big one, right? Because if not, they're just okay, Joe, right? And they're just telling me. But when I have rapport with them, they're like, hey, Joe, you know what? 700, we usually have more than that. I feel like we have more than that, right? I don't think it's 700, because we go out to eat and we do this. I'm like, okay, great. Well, let's relook at this, right? And then we'll dig in. Y'all said this, y'all said that. Hey, you know what? That one, I think that was a little bit over, right? Like take $200 off of that, or let's do this, right? And again, now they're working with me to make that little picture look good for them, right? And be their situation. So again, building rapport while you're right. These are uncomfortable questions. Do not be a robot. 10,000, right? Be careful with how you sound, right? Because you can be doing stuff like, ooh, 700 a month, right? You're insulting them. Remember, be very careful. Like, right? Little things like that that we sometimes don't pay attention to because we're usually just talking to friends. Be very careful with little sounds that you make. And I tell y'all, because this is something that was really ingrained into us, right, in our prior in the restaurant business, believe it or not, for ourselves, right? It was like using words like, "Ooh, that's expensive." Like, "Oh, that damn, you pay $700 a month for cars?" Right? You're insulting them. Be very careful. They're not going to give you more information. Right? It's always make them feel comfortable, right? Like, "Oh, that's for two, that's pretty good." Right? Versus, "Ooh, 700 in car payments." Right? Like, just be careful how y'all sound. It'll stop them from giving you more information. Again, if you're doing it right and you're building rapport, they're telling me more. Like, they're like, "Hey, you know what? No. Let's go ahead. I saw that. Like, hey, we do have this, right? Like, go ahead and add that in there and it's $200 more." Right? But they feel comfortable, right? So just be very careful when you're going into their budget. Before we go to why, any questions up until here? All right. So why the why is after the budget, because this is where you bring out the emotion and you ask those, again, very uncomfortable questions. And here, James, right? Like, feel free, because James is really good at asking some of these questions. I remember we did one on the power questions, James, remember that? So just, again, right, you now diagnosed, this is an emotional sale, right? So we've diagnosed, we're about to show them what the prescription is. But how do you take price off the table? And I learned this in one of our symmetry trainings too in SoundCloud, right? They said when you walk into somebody's house, there's always something very overpriced outside of their budget, right? So you walked into their house, if you went into their garage, they had like all these racing cars, right? They cannot afford them, but they have it. They figure it out. Or you walked into their house and they had all these, right? Either big screen TV, audio setup, right? It was, right? You can tell that was the one thing that was a little over their budget, but that's what they like. That was their passion, right? Somebody will have a bar and all this stuff, or some other one will have a baseball collection, and right, they got that $20,000 baseball card, right? Something a little out of their budget, but that they like it, right? They're gonna figure it out, right? So what the why questions do, so we know they need it, we've uncovered it, we've made, right, David say, "Hey, I'm not here, there's no way, Danelle," right? And David and Danelle already said, "Yes, we should get something today." How do we take price off the table, right? Is you got to this is an emotional sell. They're not going to have the big screen in front of them every single day and walk out there and say, "We did good," right? This is a piece of paper or an email that gets put away and they'll never see it again until the day they have to use it, unfortunately, right? But it's not something they pull out when they look at their bank account on the 15th, right? We always talk about, do they remember you on the 15th? When they see that 250, 150, $90 come out, it's not like they go walk to that cabinet and be like, "Yeah," right? They don't do that. So they have to remember you, and that why has to be strong enough for them to just easily think back and say, "Whew, that budget wasn't good, and Joe helped me. Like, I know what we did." Right? And the why questions is what kind of links those two together and takes whatever options you're about to show them off the table. And y'all want to know why, like Elijah Carujo is a great example, right? Y'all want to know why he writes 3,400, 5,500, right? These big old apps. He asks all these questions in details, right? Like, he's one of the ones that did the power questions with us, right? So we'll start digging into the questions. James, anything you want to start off here with?
I mean, we do have some of the questions just to start off, like building rapport and all that, of building the why in the actual real script there too. I mean, if you haven't looked at them, they're on page 5. And they even break it down too if they're couple or single too. If you haven't looked those, don't know where to start, don't know where to ask, man, everything's already provided for you. It just makes it a lot easier. Just take advantage, leverage the system, and just follow it. I mean, you don't have to reinvent. You're like, "Hey, I'm not good at building rapport." Great. They have the questions here. What to ask? All you gotta do is ask the questions.
Right, so everybody, please write that down, page 5 in the real script. If you don't know where that's at, right, go look at that. I want to tell y'all how, right, again, we train ourselves so much. One time me and James were gonna do the class on power questions and why questions, and we were like, man, we need to come up with all these questions. And we were writing them down, and I was calling everybody in Symmetry, and I'm like, yeah. Where are we supposed to ask these questions? Right? And we pull up the real script, and we got to page 5, David, and it was like, questions are already there, bro. Right? Like, please, our system is set. If you haven't even looked at it, go to page 5 in the real script. The why questions are already there. And it even says if they're a couple or if they're just one, right? Just a single parent, and it helps you ask those questions. James, some of your favorite questions, if you want to give them to us.
Yeah, I mean, they're in here. Let me pull up here. One, you kind of just said to yourself, if something happened to you, you know, how long can you stay in the house by yourself? I mean, and you already have the budget and you already know it. Yeah, and that's a real good one as well. Another one is, what would you have to do to maintain the mortgage and your current lifestyle? You know, if one of them passes away. So that's a real good one, because you know, everybody keeps that whatever the lifestyle they have is a big part. Like I never saw that before, but saying like, what would change to keep your current lifestyle in place? Like, what would it take? And then that's what, if you don't know where to start with, how much coverage they need either, you could go based off the lifestyle, and then you gone over the budget, what they need to calculate how much they need,
And
which is really good.
let me dig on that lifestyle one, because that one's really good, right? Because right when I was breaking down Danelle and David's budget, Danelle's like, well, we have that $100,000 life insurance, right? Most families have some kind of coverage, right? We've talked about it, right? If you walked into David's house, you see he has jerseys, and you sell basketball and all kinds of stuff. Guess what? You got a sale. That person believes in the product you sell, right? But if you walked into somebody's house and they didn't have anything for any sports, right? And you're trying to sell some sports stuff, guess what? The odds of you selling something in that home are very, very low. You want to uncover. In fact, it's a mission. You should be excited when you're doing their budget to find life insurance, to find the benefit for a life insurance policy at work, right? Because guess what? They're signing up for it. They want coverage, right? And this question right here is where you empower, right? Listen to what I'm saying. Not disempower their life insurance policy. You empower it for what it was meant for. And now they feel really good. Again, do we want to hurt their feelings, or do we want to make them feel good about the decisions they're making? Right? So instead of saying, right, little stuff like, oh, no, that's just work insurance, that's no good, right? Like we don't consider that coverage. They're going to go on the defense. You just told them they made a bad decision. So buying life insurance with you is a bad decision too in their eyes now. Let me tell you. Right? Or, oh, great, yeah, you got that coverage. Yeah, it's usually pretty inexpensive too, right, Danelle? That's all I said. If y'all paid attention, I didn't make it a big deal. I just acknowledged it, congratulated them, and moved on, because now I know they have it. And then when we get to the lifestyle question, I'm gonna put that puppy to work for me, not against me. Because now I get to say, hey, so, you know, what would it take for y'all to maintain your current lifestyle, right? And make sure we covered the mortgage protection. And I'm going to put the elephant in the room. Danelle, I love that y'all already have covered. You talked about that $100,000 policy. Usually, right, that's where families, you know, that make great decisions like y'all, right? They get to use that for that lifestyle maintenance. Is that what you were thinking of?
Yeah. And like, what's important is $100,000. If they have work coverage, it's usually like 2 years of their income. So for 2 years, you keep status quo. Like, I point that out. Yeah. So usually that work policy, it's about 2 or 3 years of income, and then things change.
Strong, right? And now I've put their policy to work already. And guess what? It can't do 2 jobs. Right? It can't do mortgage protection either now, because now it's just barely going to maintain 2 years. Right? I love that. I'm learning something today. Right? So now I get to say, hey, Danelle, so I'm glad you got that coverage. Again, congratulations. Y'all are making great decisions. Right? So you have that 100,000, and right, it looks like, you know, if, you know, David's around 50, 60,000. So that'll give you almost 2 years worth of lifestyle maintenance. Is that right? Y'all agree with that? Perfect. Right. So now I'm glad you checked that box. Y'all are doing great. Now let's check the mortgage protection box, right? How do y'all feel about that? Again, I'm going to ask them the question. How do y'all feel about that? Y'all want to continue? Right?
Yeah.
Because I take it away from them. Take it away from them. You'll be amazed of how you take it away from them. They want it even more. Right? Y'all want to keep going here? Yeah. Show me how, Joe. Show me how. Absolutely.
You pointed this out one time, Joe, so I think it's worth mentioning right here that you're not asking David, because David's the income earner and we're talking about covering David. I'm the one that's left behind. I'm the one that has to figure it out. You're asking me, right? Because that's the pain point.
Yep. Right. And it goes either way, right? So like, ooh, Friday's a great example. Friday, I wrote $3,400 on Friday. It was covering the wife, not him, because she was bringing in all the income. He was even older, but he was only on Social Security, and they had just bought this house, and they're like, we're worried what happens to me, because she was still working. Right. And it's not always him or her, right? It's the income earner. It's a great point to know, right? Like, learn these things, right? Because this is why we get so many yeses. And then I was trying to show her smaller policies, and she's like, well, how much more can we get? Because I added, right? This can protect you in so many different ways. And then she brought up, they've tried to get her and him coverage, and he couldn't get coverage. So she's like, I also want extra coverage on him. Right? Because the questions were, tell me how to help you. And they're like, please show me this. And Joe, you mentioned, right? And then I always mention stuff like, hey, so when I protected myself, right, I started coverage on me. And so David, Danelle, y'all are so similar to me and Sandra, right? Y'all got your 3 kids. I have my 4, right? If I'm gone, right, I also made sure, so I have plenty, right? We have our lifestyle like y'all did, right? Or y'all do. And then I have, right, my mortgage protection, and my mortgage was about 300,000. So we did about 320 just to make sure she had that and all expenses. And then I even added, we had 2 car payments, right? And we had a little side by side. I wanted to make sure none of that debt rolled to her. So I even have extra. And then because I like to go have fun, right? Because I've shared where we live, we go out and play in the desert. I also have, right, I'm going to show y'all some accidental coverage, but mine is maxed out, and I'll kind of explain that to you in a little bit. And then I leave it teased, right? And I'll kind of explain that. I'm not going to tell them exactly where I'm at, but I also told them what I did and how I protected my family, right? Bringing out their whys. And then, so David, so do you want me to continue? You want me to show you how to do that?
Please.
And now they're asking me, right? My how the tables have turned, right? Because we switched it, right? You got to be able, I'm not a salesman. I'm a problem solver, right? I'm counseling, right? And I'm trying to find out exactly where they're at, and then I can just show them a solution. James, any other, right? That was a great question. Sorry.
Yeah, another one is just repeating, like after you ask him, like, how long can you stay? They already know. You ask them the other question, like they happen, you repeat them. So you're saying that if something, should happen to you tomorrow, and we don't put the protection in place today, your family couldn't afford to stay in the home.
Ooh.
So you repeat it after them, and they're like, yes, no, yes. And then that's where you follow up with then we should probably get some coverage in place today. And they'll be like, 90% will be like, yes, of course we should. I'm following through.
That's good, right? Repeating it, because then they have to reaffirm. Again, it's poking the bear, right? Because you ask them the question and they say, yeah, you know what, you showed us, Joe, we looked at it, and right, Danelle would only have a month and a half, right? And they said, that's what they told me. And I'm like, man, so what, I just want to make sure I understand correctly, right? So what you're saying is, David, you're gone, Danelle, right? And then I'm pointing it towards Danelle, right? And Danelle, so there's only about a month and a half, if that.
Yeah. Yeah. That's what it looks like.
Right. And again, dig, David, right? Like, how does that make you feel?
Incredibly uncomfortable.
I felt the same way. I'm going to help you with that. Right. Like it's uncomfortable, right? It's like poking the bear. How does that make you feel? It feels horrible. Of course it does. Right. But we don't want to re-poke that bear. But let me tell you, the more you poke, the more uncomfortable it is. I bet you that's going to get you bigger deals because they want, again, it takes the value, right? It takes the dollar off of that policy and it puts the value in it, right? They're like, I don't care what it costs. I want to be protected this way, Joe. Right, Holly?
Might be a little off topic right now, but kind of related to the budget, especially when you're dealing with older folks, like a person who is, say, single and it's not a situation where the family is going to be keeping the home. What is the value in doing a full, like, let's talk about your utilities, let's talk about your grocery budget, let's talk about your all your little monthly expenses when the family is not even going to be paying most of those. Like it doesn't affect what's going to happen with the home. Like when you have a couple, obviously they have to keep making all of those payments.
So it still brings, so you still got to understand and diagnose, right? Because now they're older and they're single, right? How are you going to show a $250 a month policy for 6 months worth of mortgage payments if you don't even know if they can afford it? Right. So there's still the, I need to find out if you can afford it part, right? That's the diagnosis. And then, right, where you find out, hey, how do I prescribe something? Prescription is right where you tie the why, right, to the yes, you can afford it and yes, you need it, right? Because you break down his budget. If he doesn't have $10,000, $20,000, $30,000, $40,000 in his bank account, but his job is to leave it to his kids, right? So the only way you do it, breaking all that down and asking how much is in your bank account and your savings, how much are you putting away in your savings? Because then, hey, oh, so you want to leave this to your kids, right? How do you tie it? Is okay. So how are they going to pay for it? I mean, do you have right in the bank enough to pay for 6 months, 12 months? And they're like, no, I don't. I'm living paycheck to paycheck, Joe. I'm old, right? Like I'm on Social Security. Okay. So I just want to make sure you want me to help you leave the house to your kids because the bank's going to take it if we don't. Correct. Okay. I can help with that, right? So that you still want to break that down because you need to know what's still right in the bank. Because guess what? Those are usually they don't need this coverage, right? But do they want the coverage? Because then it becomes
Hi there,
right? So
15 on 9.
right. So that's where you go into, hey, we've uncovered, right, that they have plenty of money. Hey, you don't need this, but are you planning on leaving that 20,000 in your bank account to your son? Or with $89 a month, right, we get him 6 months, 12 months worth of mortgage payments, and we're accomplishing everything you want, but they don't have to take out of your bank, right? We're not digging into that nest egg, and he can sell the house and get all the equity of it. Oh, I didn't even know this existed, Joe. Yeah, let's do that for 89 bucks. They're going to have a year's worth of mortgage payments, and I get to leave them the 20 grand I have in the bank. Sweet. Let's accomplish that. Right. And then you find that happy medium. So there's always, I mean, you have to, right? You have to dig into that budget no matter what, because that's the only way. And James, you said this so well one time. You showed him how this works, right? Or how you what was it? How did you say it?
The picture.
You painted the picture, right, of, hey, I'm gone. How exactly is this going to work when I'm gone? And so when you break that budget down like that, right, you're able to paint that really good picture. So I hope that helped. Any other questions before we get off?
Hey, Joe, go ahead.
No, go ahead, Nicole.
I was just going to ask really quick. I get a lot of pushback when I mention the alternative option to include accidental coverage. A lot of people view that, especially like I get a lot of people that really want full payoff. If they can't get full payoff, they don't want to talk about anything else. And so when I mention accidental, they're like, well, I just kind of look at that as throwing money away. So how do you deal with that?
So we'll do another, we can make that next week's, right? But that just means you're not explaining it correctly. And then if you're getting a lot of, I want the full mortgage payoff, that means you're talking about it a lot at the very beginning. And so you've embedded that idea of, hey, we have to get full mortgage payoff because if not, it ain't worth it for me. Right. So maybe next one we'll do on that, right? Because when you're booking the appointment, right, and you've looked at your client already, right, just on paper almost, right, and they're 65, right? So like my rule of thumb, if they're 60, 62, I'm already looking at mortgage equity protection, right? So I'm very careful while I'm booking the appointment that I'm not saying, hey, yeah, we're gonna I'll show you some options that's gonna pay off the house tomorrow, right? I already start, right, planting the seed of, hey, so we'll look at some ways to make sure we're protecting that mortgage and right, it's usually a couple of years to a couple of months of paying off your, right, making that mortgage payment to make sure your wife's protected. That, oh yeah, we want that, right? And that was in booking the appointment, right? So you're somewhere in your script, right? Either booking an appointment or running at the beginning, you're embedding the thought of, right, hey, my job is to pay off your mortgage in case you were to pass away, right? So then if you don't show them that, guess what? They're like, oh, well, you're not doing your job, right? So that maybe it's somewhere in there, I promise.
That makes a lot of sense. And I had those same thoughts. So yeah, it starts in booking the appointment of keeping that mindset. Thank you.
And Elizabeth, and then we'll go.
Yep, just a quick question. I don't know if this would be better to ask you afterwards because it was a question that I had after rewatching last week's production call. How do you want me to ask now or do you want me to ask later?
Ask away. We're here.
So I have been doing some of the trainings in Summit. And there was a point on there where they were talking about last week's call. We talked about, you touched on like you don't take phone appointments. Did I understand that right? You just, you try to pivot it straight to the Zoom appointments?
Correct.
Okay. And so there was something in the training that was talking about running a phone appointment. My question was more of like, is that personal preference or is that something older in the training that we've now as Symmetry agents moved more towards the avoid the phone appointment and really push for the Zoom appointment? Does that question make sense?
So yeah, so you want to push a Zoom appointment, right? So
Okay.
the difference is, so and these are just the stats that we've done in our small group, right? But so if you're running a phone appointment, you have a 30% close rate. Same appointment, you run it on Zoom, you're at a 70. Right? So you're going to do the exact same thing, run the exact same appointment. You're just going to help more clients running a Zoom appointment. So that's the only science we have, right? So either you're going to work a lot harder and get less results, right? Or you're going to work smarter, right? And have a Zoom appointment. And then if you're not booking Zoom appointments, you're usually just asking the question. Make sure you don't ask the question. Hey, so tomorrow, right at 3 o'clock, you want me to call you or you want me to go over Zoom? Don't ask the question. Yeah, it's, hey, tomorrow I'm sending you that, or I'm sending you that email. The Zoom link is in there.
Now, is there ever an appropriate situation, like if you're dealing with, say, a client who's not tech savvy, an older client that just cannot figure out that kind of Zoom stuff?
Yeah, you'll have your exceptions, right? You won't, but
Okay.
you want to run as many Zoom appointments, right? And guess what? They're gonna all tell you, I don't know how. Hey, no worries, it's super easy, right? You already got that email. If I have to, I'll call you a minute or two before and I'll help you hop on Zoom.
Okay, perfect. All right. So you would just assess that then. And if they're really, really confused, then you just,
Yeah, let
okay,
me tell
don't worry
you,
about it.
I would say 1 out of 100 actually can't.
Okay. Okay. That's good to know.
Right, it's very,
Yeah.
very low. Everyone you can help them hop on Zoom. So
Also good.
And usually, Elizabeth, if when like Joe said, like that one person who can't, just FaceTime them. Honestly, that's what I do, and it works
lots
just
of
as well.
ways. Yeah, that's great.